Hello students, I'm Zara Fatima. Welcome back to our channel. Students, in this video I'm going to explain you the subject financial management, and today's topic is working capital. So I'm going to explain you in detail about the concept of working capital. What is working capital? Fund which is necessary to meet the daily requirement of the firm is called working capital. In other words, working capital refers to that part of the firm's capital which is required for financing short-term or current assets such as cash, debtors, inventories, marketable securities, etc. Hence, it is also known as revolving or circulating or short-term capital. And the formula of working capital is current assets minus current liabilities. So students, what is working capital? So every business organization needs funds for two main purposes. First, for its establishment, and second purpose is to carry out its day-to-day operations. So the fund which is required for its establishment, that fund is represented as long-term fund, and the fund which is required for meeting its day-to-day activities, day-to-day operations, that fund is known as short-term funds. And short-term funds are needed for the purpose of purchasing of raw material, payment of wages. So short-term fund is also known as revolving capital, circulating capital, and this fund is also known as working capital. And the formula of working capital is current assets minus current liabilities. So the difference between current assets and current liabilities, that represent as working capital. So what are current assets? Those current assets means those assets which can be converted into cash within a period of 1 year. And current liabilities means those liabilities which we have to pay within a period of 1 year. So working capital is a difference between current assets and current liabilities. Current assets consist of cash, debtors, inventories, marketable securities, bank balance, prepaid expenses. So these are the current assets. Now, concept of working capital. The concept of working capital consists of two parts: gross working capital, and the second one is net working capital. Gross as well as net working capital. Now, first one is gross working capital. What is gross working capital? Investment of funds in firm's current assets are known as gross working capital. Current assets includes cash, receivables, stock, short-term securities. These current assets can be converted into cash within a period of 1 year. So students, gross working capital means investment of funds in current assets. Current assets consist of cash in hand, cash at bank, debtors, bills receivable, stock, prepaid expenses, and short-term securities. So investment in these assets is known as gross working capital. Now next is net working capital. What is net working capital? Net working capital is the difference between current assets and current liabilities. Net working capital can be positive and negative. If current assets are more than current liabilities, it is known as positive net working capital. If current liabilities are more than current assets, it is known as negative working capital. So students, net working capital means it is the difference between current assets and current liabilities. If we subtract current liabilities from the current assets, the difference is called net working capital. So the net working capital may be positive or it may be negative. If current assets are more, the net working capital represent as positive net working capital. If current liabilities are more, the net working capital represent as negative working capital. So students, this is the concept of working capital, gross working capital as well as net working capital. Like and share this video. Thanks for watching the video.